What's up, people? Hey, it's just me at the moment. Joe said he's going to join us a little late today, but I hope everyone is doing well. I'm enjoying a semi-bachelorhood at the moment. My family's out of town, and so kind of enjoying having some free time to be more productive. So I am doing that. And that's all I can do on the intro. So I hope everyone's doing well. Markets, let's take a look real quick and see where everything is standing today. We took a little dip, a little dive. Probably some of that's due to the mess at Coinbase, because Coinbase is under SEC investigation over those tokens that were in the indictment of the guys that did the insider trading. Turns out that investigation was already ongoing at the time of the indictment. Now, if I could just find the frigging Coinbase article, we'd be in good shape, but I can't. So I'm going to find it on Twitter, and I don't understand how I could not have this article when I had it. I was looking at it yesterday and today. 1 second, folks, bear with me. Anyway, Coinbase itself took a dive on NASDAQ, is currently bleeding out, and that's because they're under SEC investigation. Now, my expectation on the outcomes of that SEC investigation is that, like, hopefully all the big players, they'll get a slap on the wrist and pay a fine and say don't do that again. But the end result could be that this makes all of the existing players in the space that are operating with U.S. customers reassess what's available. And we already have, from a trader's perspective, a frequent trader's perspective, we already have too few tokens pairs available in the markets, for at least for my mean reversion strategy. So I think overall, look, the markets are churning sideways here. We're in this 20 to 23 range on Bitcoin. We're in the 12 to 1600 range on Ethereum. It is what it is. I'm not expecting anything major anytime soon. There are folks saying that now there's a huge amount of buy support at 20,000. For Bitcoin. I don't know if that's holding today. The fear index is at fear and greed index is now at 26. So it has taken a bit of a tumble from our 34 the other day, down 8 points overall. So obviously that's something to keep an eye on. But look, current longs are at 56.33% total on Bitcoin. Binance longs are at 55.89%. Look, at the end of the day, we're in this stage of the market where we hopefully are at the bottom, but we'll have to see. Eamon said, like the BlockFi case, I bet another 100 million of revenue for SEC so they can hire more staff and prosecute more projects. Yeah, exactly. Rather than educating people and actually altering and changing the methods they use for enforcement, they will start prosecuting more people for trying to innovate in crypto. But, we can't be surprised by that. It is what it is. And it's just, the incentives are not aligned. When a regulatory agency's incentive is how much in fines can you bring in and how many public big headline prosecutions can you make, and the top of the organization is all about, posturing and positioning and ego, then this is what you're going to end up with, because the incentive is not to protect people. The incentive is to prosecute. The incentive is to make a name for yourself. The incentive is to increase your reach and your career and to do more to grow your bureaucracy. And so when that's the incentive, this is what you're going to get. Imagine if all that money and brain power was focused on education, innovation, helping projects to be safer, helping projects to learn how to disclose things properly, helping decentralized autonomous organizations learn how to function with the SEC, figuring out methodologies to sandbox projects so that they can operate and learn and grow, figure out ways to grade projects so that there's a scoring system so the public says, this one is more honest and discloses, this one doesn't disclose as much. I mean, there are all kinds of things that the SEC could do to actually protect people. But instead, they are an after the fact enforcement organization. And after the fact is when they protect people. The whole concept is that by enforcing, putting people in jail, by fining companies, that they will scare other people. But, you know, looking at the history of the stock market and the history of commodities and the history of everything else in this world, that fear hasn't worked. There have always been scams. There have always been penny stocks screwing people over. There have always been pumps and dumps. There have always been ways that the average guy gets screwed. And rather than teaching people how not to get screwed and how to identify getting screwed, they spend most of their time trying to clean up the mess after the fact and prosecute people. I'm all for prosecuting scammers. I love that that's part of what they do, and I want them to prosecute people who scammed innocent people. The problem is that that's not the focus. Should be on helping people avoid being scammed. Yes, disclosures are part of that process. Yes, making sure consumers understand the risks is part of the process. But there's also the ability to teach people the things that we've all had to learn by losing our money. And that is how to identify and avoid scammer projects. If it's too good to be true, it probably is, kinds of things. So anyway, rant over. Joe will be glad he missed that because it makes him nervous. I think he freaks out. I think he thinks the SEC is going to come like radar show or something because I criticized the SEC. But I think that's what the SEC should be doing. And I think the SEC should be encouraging innovation. It should be moving it forward. But when many of the people leading are from traditional finance, that's probably not a realistic hope on our part. I would love to see our president or others within politics and Congress working to have the mission of the SEC change, right? Can you educate enough people, put in enough systems to increase innovation, increase money coming into the United States, increase employment, help boost people up, get the unbanked banked? I mean, imagine if that was the goal of the SEC, to protect people, but also to teach them how to become wealthier and build wealth, right? What if we taught people how to manage their money? What if we taught founders how to succeed? What if we taught them how to make sure people are safe? I mean, the amazing capabilities that are just, the money left on the table is sad. Anyway, so now rant over, I think rant over. Let's see what else. What do we have today? I have not put out yesterday's episode, so my apologies, boys and girls. I am going to be interviewing this interesting little project. My buddy Asfi from Olympus Days. This is a brilliant guy, Asfi. Profiled, and I'll put the tweet in the thread, but profiled a project called Dyad. And I'm going to be interviewing Joey, the founder. And here's Joe, the co-host.
Hey, buddy. Hey, guys. Hi, everyone.
What's up, dude? You just missed my SEC rant, so you're just in time.
Oh, yeah. Well, okay. You're not going to replay that for me?
You can listen to the show.
Oh, look it. I leave Brad alone for 5 minutes and he doesn't put our disclaimer banner up.
Why was it down? Why'd you take it down?
I just put it up.
No, but the only way it goes away is if somebody takes it down.
No, anyway. No, it's never there when we start the show.
Okay. Anyway,
just keeping you out of jail.
I'm interviewing these. Huh?
Just keeping you out of jail.
Appreciate that.
Got it.
Talking about this project called Dyad, which is a really cool gamified hybrid NFT DeFi project. My reply to Asfi was that I felt like this is so cool and has so many opportunities. I'm not going to go into how it works right now because I want to do that in the interview I do with the founder, Joey. But I'll put the tweet in the show notes and everybody can check it out. Or you can check out Asphy's thread too, Asphy3333 on Twitter. He's a great guy and he's worth a follow. Brilliant guy. Anyway, awesome thread about how this project works, the kind of cool inherent risks in it, the math games that are played. I think only whales are going to be diving into it, but you know, we have a few of those that listen, so they may be interested in it. But cool project. I'm going to be interviewing Joey, the founder of that, shortly here in the next week. So
the project is called Asphy. The project is called ASFI.
No. Asphy.
I missed it.
Asphy is the person who wrote the thread. The project is called DYAD.
All right, cool. I've heard of this. Yeah. The
founder's handle is at Joey Roth, ROTH. Joey. I don't think he has a link for DYAD yet. But anyway, I'm looking forward to discussing it because it's a really cool concept. It's a lot of fun. And it's got a stable. So it's even more interesting. Let's see. Ethereum weekly exchange net flow points to a growing accumulation trend. So that's good to see. I'm not going to climb into a lot of details here, but also venture capital, despite the bear market, is still pouring into crypto, dude, just like flooding in. So in the first half of the year, $17.5 billion. And so that puts us on a course to top the yearly record last year of $26.9 billion. Coming into crypto. So I'm hoping that as the markets seem to stabilize a bit and grow, that we'll see that grow even more. But VCs are not slowing down. And I think, look, at the end of the day, people understand in the investment community, especially guys who are looking, look, they've been getting away with 2-year investments in crypto and getting their returns back fast, or even a month or 2 months. But they also understand that now is when the long-term plays get built. Right now is when the infrastructure gets built, the shovels are being sold, the founders are building the core infrastructure, projects are building and making themselves stronger. So it's good to see. And I think that they understand the long-term potential for crypto. They understand the long-term potential for DeFi. That's why the money's not slowing down. It's growing over last year as people are investing in the space. So I'm excited about that.
Yeah, no, I mean, look, when I read this article earlier in the thread in our channel, and I was like, holy shit, one of the things we don't talk a lot about is FTT as a token. I mean, if FTX is doing all these moves and pulling all this money, everybody should be thinking about FTT as a token again, because I think it's like 23rd or 22nd or whatever. And
But it's used for fees on FTX, right?
Dude, I haven't used FTX. It's the one that whenever you shows FTX, then it shows that as the token.
Yeah, I think it's like BNB. I think it's used for fees.
But maybe this could be another BNB type run.
Exactly. And anything that adds more value to that. Look, every day they do acquisitions, they're doing growth, they're building more stuff into their platform. So the value of that token is certainly got some potential to increase. And just like everything else, it's kind of resting here at its let's see, where's its all-time low? Oh no, that was its lows. We're back 2021. Yeah, look at that. So it's got room to grow. And you're right. I mean, that's an organization that's being run well. So why shouldn't that be a play? Especially if they're making moves to grow their user base. Look, I don't know if it has the same burn mechanisms, though. We should really check it out and see if it's modeled after the way that BNB was modeled, in that it has all those built-in burn mechanisms, et cetera. If that's the case, that makes it even more attractive. So that's I think that's got some real potential.
Yeah, if you're going in, do that 25% rule that we always talk about. Don't go in with your full position if you decide to start dabbling in FTX.
Yeah. But I think that's a logical play. That makes a ton of sense, dude.
It's one that we haven't been really thinking about, or at least I haven't.
No.
I mean, we all talk about FTX, but I'm like, shit, you know. I mean, right behind it in the cap chart, I think is, or in the the rankings, I believe is crypto.com. And I can see what's happening. People look at crypto.com and go, oh, what is it, 11 cents maybe or something? It's a very low.
Yeah, 11.6 cents.
Yeah, and they're going, oh, I should get that one. But, and FTT's at 26-ish, 26.10.
Yeah.
Remember, it doesn't matter how many you have. It's the value of what you have. So, if I'm betting on those one or the other, or maybe even both is the play, I mean, maybe you should take enough positions in both, but I would definitely pick FTX first. It was my call.
This is an ERC20. I bet it is. It might be a Solana, but I doubt it. It's probably 116 million in the past 24 hours in trading volume. Market cap is 3.52 billion,
which isn't a lot for a big. I mean, when you look at the other ones, it's not a lot for look, Coinbase goes down or is going down. I mean, the only ones left then in my mind is the Binance, crypto.com, and FTX.
Yeah. Circulating supply is 134.84 million.
It's not a lot. What is it capped at?
Let
me pull up something while you're doing that.
Here we go. Total supply 330 million.
Do we have a circulating 135 roughly. So, you got another 180% of the tokens to come out, it looks like. But that doesn't really matter, like you said, if they're being used for the transactions.
Yeah.
And it's a platform token and they're being burned. I mean, that's would be the next thing to figure out is what happens to them when they're, used in the transaction. Or is it just keep it in the wallet and you get lower fees like at Binance? Or
holders of FTT reportedly receive benefits such as weekly buying and burning of fees, lower FTX trading fees, over-the-counter rebates, collateral for futures trading, and socialized gains from the insurance fund. Wow. I wonder if that happens on FTX US too. I bet it doesn't. I bet they can't
socialized gains. I mean, I know about socialized losses. Like something goes bad on the platform and they take it out of everybody's account.
Maybe they just mean they spread the earnings out.
Yeah, that must be it. But look, this is there's FTX US. I don't know. I mean, I was surprised when I was on Binance US the other day. Just how many tokens are there,
Yeah.
Where Binance US, you had at one point, I think, like less than 10 tokens not too long ago. And you go there now and there's like a good, I don't know, 180, something like that. It was a pretty decent list.
Yeah.
But this is one that I would look at because this is
something I haven't even thought about. I'm glad you brought this up, dude.
Yeah, look, because remember we were all looking at BNB. I mean, God, I was trading BNB from like when it was below $20, and then I saw that shit take off, and there was all the discussion in the trading channels about, oh my God, I don't want to sell my BNB because of the trading fees and this and that, and we saw where that went. That got up to like 800 or something before retreating back down to wherever it is now, 200, 400, I don't remember, but so if this. I just have a feeling these are going to be designated as sort of the clean, for lack of a better word, options for U.S. people, and they're going to soar because these are the ones that Wall Street's going to go buy.
Yeah,
when they really want to get in the game.
They have a buy and burn. They repurchase and burn tokens equal to 33% of fees generated on FTX markets, 10% of net additions to the backstop fund. So socialized gains. I guess that's the insurance stuff. Maybe that's an insurance policy against hacking they have for the platform.
Yeah.
And they burn 5% of fees earned from other uses of the FTX platform. Weekly basis, they do a burn. Wow, that's Joe. This is good shit, man.
Yeah, I think it's. I mean,
really good.
Lots of good press, lots of venture money in, lots of not roll up stuff, but strategic acquisitions, advantageous, opportunistic acquisitions. And what that
Yeah.
really means is you're getting it for a value, at a value. So, it's kind of the Buffett model, I guess. But
Well,
these
yeah,
guys
there's
look
some
like they can
fundamentals in
scale.
there. Yeah.
They can scale, man.
Oh, they can totally scale. This guy, I have the utmost between CZ and Sam. I feel like these are two pretty hardcore dudes. So
Yeah, you could even see a merger in the future between those two to be the number one bomb,
potentially. CZ
if it comes
said
down to it.
the other day that he wants nothing to do with the stock market. So I thought that was an interesting take on his part. Maybe he fears that puts a target on his back, and he doesn't want that target.
Yeah, I mean, he already did it when they were doing the synthetic Tesla shares on the Binance platform. That's enough right there. So he's already gotten exposure, but I think he's right. I would be kind of laying low, trying to finagle a way through this at this point, because you are the number one player.
Yeah.
By far. So you have the power to influence, and you just do it in a way where you don't, you got to play the game on this one, man. Sorry. But I'm sure all his investors are telling him the same thing. So
of course. So this is something on the regulatory front I hadn't thought about. But that all of the TradFi folks, if they want to play in this space, they can't get data feeds from non-compliant oracles like Chainlink. Right? You've got to have well, it makes sense that they are required to have compliant, secure, can't be manipulated oracles. And so this new, I don't know if it's new, but new to me, our operation called Kaiko announced. Oh, actually, they won $150,000 prize at ECC, so they must be pretty new. That they are creating an enterprise-grade solution for regulatory compliant data streams. So in other words, these are the kinds of building blocks I want to see, right? We want to see companies that are going to make it easier, projects that are going to make it easier for TradFi players to be in this space, because the more we interconnect with the real world, the more stable we'll get, the more difficult it'll be for it to be shut down by regulators, and the easier it's going to be for us to onboard more and more users. So, and look, it doesn't mean everybody has to have regulatory compliant oracles. It just means that there is someone offering them so that the TradFi guys can play, right? And that to me makes a lot of sense.
So how do you get, I mean, like where do the prices come for, say, like the New York Stock Exchange?
You mean how do those get to the brokers?
Well, yeah, I mean, I think they just look on the screen and see it, but is it like a Bloomberg terminal?
There are data feeds that come in from the stock exchanges via APIs to the brokers and to like your online broker, right? Like if you're on whatever, that's a price feed that comes in, and it's an approved, secured, can't be manipulated price feed that comes from the primary exchange. In our world, it's much more difficult, right? Because so you take your example, Gains Network, the margin trading synthetics project that we had on and that I've interviewed. They're pulling API pricing feeds from 8 different exchanges. And the reason for that is they want to eliminate those big, fat finger wicks. They want to eliminate stabilized pricing between all of them. So somebody like this Kaiko is going to have to aggregate pricing from multiple exchanges, because while they often are close enough, they are never exactly the same between exchange over exchange after exchange.
Oh, yeah.
So something like a Kaiko offers that. Same with DEX exchanges. I mean, Jesus, those could be off by magnitudes. There are entire people making a living arbitraging, DEXs.
Yeah.
So I can see this being an awesome problem to solve because it helps the entire ecosystem grow. But I also think it's a big ass problem to solve. And the question becomes, how do they become regulatory compliant, right? Like they can measure up from a technical perspective, they can encrypt, they can do whatever they're supposed to do to be compliant. But at the end of the day, I'm assuming they have to have some kind of regulatory certification saying they are compliant. And the question I would ask is, are those regulatory bodies going to say, yes, but we don't like your sources of data? Like, we don't trust Binance's data feed, or we don't trust Swobi's data feed, or we don't trust FTX's data feed, right? How? Because there's too much market manipulation, whatever. I mean, there's all kinds of parameters there that I think they're going to have a hard time, but I love seeing somebody do it. So,
well, you know what's interesting is, remember those guys in Stockholm that I think I introduced you and some others to them, Vintner? They're a regulated index provider specialized in crypto assets. So we construct, calculate, maintain indexes underlying, and they're already providing the indexes to 21 Shares, Valor, ByteTree, Wavebridge, and others.
Oh, nice.
But I wonder, how are they getting their pricing data on their, or does it even matter on their indexes?
Oh, I don't know.
I'd be curious to know where that's coming from.
For regulatory compliance in Switzerland, they have to have something that.
So somebody's providing a regulated stream already, is what I'm getting at.
Yeah, exactly.
But maybe this is more European regulated versus Dyad. Who are we talking about here? What's this group again? This is
Kaiko.
Are they in the US? Because I think that might be the difference.
They're saying they use the GAP framework in the US.
That's
and
US.
AIFMD in the EU. Inverse finance, do finance. The issue comes when enough data streams are exploited, blah, 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 blah. The ability to use iSearch orders can make a basket ETF covering the top 10 coins feasible.
Well, look, like you said,
think that they're saying that maybe for ETFs, this makes ETFs more feasible for being approved.
Yeah, that's what Venture does. They're like making smarter crypto indexes for ETF issuers. So look, this is the thing that we always talk about, the spot ETF. There was some other press yesterday or today on that, and I just can't pull it in my head what it was about. But there's talk about, and I think it was Oracle, or maybe it was in the article that I read that you put in the channel. It might be this company.
Oh, okay.
But this is all good because it brings more institutional money in on a regular basis, trading in, trading out, standardizing, stabilizing the market. Again, this is with the big stuff. You're always going to be able to go to the edge and find new cool stuff that they're not going to be able to touch, but you can touch and we can touch. So this doesn't take away the fun. This just moves some into like big boy category and others into, where we like to play. And find those pearls basically, so this is all good. To me.
Institutional ETH sentiment turns positive after 11 weeks of outflows. We just saw $120 million worth of inflows into exchanges. I think this is a little bit wonky, this data, because a lot of folks were saying that the reason for outflows, I think this is inflows into centralized exchanges.
Yeah. Usually when it's going in, it means they're going to sell. Yeah.
Yeah. So I'm missing something here.
I think he's got it backwards with the way they're saying it in the article. Because if it's moving off exchange, that's where you want it to go, because that means they're holding. As you know, I'm not talking.
Four consecutive weeks of inflows, according to CoinShares. Prior to this, ETH investment products have been on a lengthy 11-week run of outflows. What saw the total year-to-date outflows hit at, according to data from the latest CoinShares, Ether investment products posted, investment into Ether-based products. Okay. So
like stable going in to buy ETH, basically.
I guess that's what that means.
Yeah.
So this is like kind of TVL plus or something.
Yeah, there's probably, if anybody wants to dig deep on this, Kingfisher usually has good data on that. The funding rates for each one across a couple of exchanges, I think. Just go dig in there. They're on Telegram, as is, Brad's group, Material Indicators. And you always see discussion about stuff like this in those channels.
Yeah, those are the big brain guys that track this shit. Singapore-based asset manager IDEG argued that the broader crypto investor sentiment is now beginning to transition from neutral to bullish, and expects Ethereum's merge to be a key driver of the market recovery. Interesting.
Hey, what are we looking at time-wise? Is that timeline in August still holding, I think, or is it
September 19th was the time, was the last announced date.
All right, cool.
And that's not, again, not locked in.
So you know what's going to be interesting is I look at that as like the catalyst for this market right now. I don't know what could be as big as that.
Totally. Yeah.
So
completely.
Historically, when you look at those numbers of like, September is usually a down month, and then October is an up month. What I'm wondering is, depending on where ETH goes between now and September 19th, you're going to kind of have an indication of what's going to happen after that event. So if it's been skyrocketing, if it's at 4,000 coming into September 19th, I'd be trimming at that point, to be honest. If it's at, right around where it is now.
Here's the interesting thing. Those big institutional players coming in to stake, they won't be able to take their money out for at least 6 months.
After the merge.
After the merge. So what's going to be interesting is, we may see dumps at that point for people taking profits, but that's a shit ton. If everybody's diving in because they want the staking rewards from Ethereum at post-merge, that's one thing. That money's still going to be locked up, but there will be plenty of people just buying to speculate and not staking at all, and then dumping post-merge. So I think you're right. You cut out some profit to make sure you cover your initial in, and then if you want to stake and let it ride, let it ride. So
no, well, that's actually a really good point, because I was sort of just making that generalization on what is it, sell the news or whatever, or to buy and then sell when they announce something. Like, there'd be, if everybody believes it's going to be successful, there'll be a nice run up going into that. And then a lot of people
buy the rumor, sell the news. Is that the one?
That's it. Thank you. Yeah. And then they're going to be dumping. But if most of the institutional guys are locked in for 6 months, that might make October a pretty interesting month. Because I was trying to think if it's going to be another Pumptober, or is it going to be a sell month? Because all the fractals are talking about October, or they were. I don't know where they're at these days. But so to me, and I think is Niblitz talking about the ETH merge?
I think so. And I would say that it's a technical catalyst driving a psychological reaction, but I'm not sure about how he's framed the question there. So I don't know.
I think it is a technical catalyst in the way that the point you just brought up. It's also a technical catalyst in the way that I think gas fees go down, right, in this merge?
The gas fees going down is more about the L2s. It's not as big an impact on the gas fees from this at all.
So the whole technical side is just going from proof of work to proof of stake.
Yeah, that's the primary thing.
Right.
98% reduction in energy usage, et cetera, et cetera, et cetera.
Okay. So then the psychological catalyst is just more about what we were saying, Niblitz, that everybody's looking for an event. Everybody's looking for something to sort of decide, okay, it's either going to succeed or not. And they're gearing for that date.
Yeah, so that's the psychological catalyst. I think the technical catalyst is two things: is the earnings that you can get from securing the network, which will become the primary methodology of securing the network. And then the second thing is that the suspicion is that as the L2s grow and fees get cheaper and Ethereum becomes more of this storage mechanism for all of the other L2s, that it psychologically is fulfilling something it's been trying to do for years, but it actually is going to make it function better, function faster, be more secure, and be a stronger network overall. So I think there are both types of catalyst here, and driving it. And I think that the end result is people's expectations that Ethereum will continue to grow and new projects will continue to grow on it because of that. And so that's that, I think it's a bit of both. I think it's a bit of both.
I mean, look, if it's the tried and true solution at that point, and you're going to launch a project and you're not going to get gashed on gas fees, it's like, it's the choice, basically, for the institutional main market gals.
It's interesting. I listened to a Twitter Spaces yesterday afternoon with some folks that Stanny, the founder of Aave, the founder of what's that L2 chain? The Optimism chain. Vitalik's Metis. I wanted to say Mattia for some reason. Anyway, Metis. And they were having a discussion about the ZK-EVM capabilities. And, Metis is using Optimism. And the biggest problem with Optimism is there is a 7-day delay on withdrawals based on how that L2 functions to secure the network. Whereas ZK-EVM, not only, so the difference between the ZK rollups previously and Optimism was you had to alter your code for rollups in order to make it work. But Optimism, you could keep it exactly as it was to deploy on Optimism-based layer 2s, but or I guess optimistic algorithms, but you could keep your code exactly the same, but you were locked up for 7 days. Now, the ZK-EVM launches change everything, because now you don't have to change your code and you get instant, fast withdrawals and fast deposits into the network. So it's going to change things pretty dramatically, I think, when ZK-EVMs actually roll out fully functional. I mean, they're all in pre-alpha stage right now. So
remember when we first started using Polygon and there were 2 bridgeways out? There was the one that took like 7 days.
Yeah, that's
and
true.
Then they got to set up a fast one, which I think would take a couple hours to move from Polygon to ETH. And it would cost money. If these guys can basically pull those maneuvers off instantly, or in a reasonable short time period, that's huge.
Yeah, totally agree. Totally agree. So no, that's good stuff. Good news. Let's see what we got. Oh, that's if we
wait.
Oh, I asked a question on Twitter. Huh?
I was gonna ask if you could just back up one screen again, because I saw something about the Philippines SEC investigating somebody.
Oh, yeah, I saw that too.
Philippines
investigating Binance.
Oh, whatever.
It's some whack jobs in the Philippines trying to ban Binance.
What's the Japan do? I can't see the edge of the screen. Japan Ministry of Commerce launches
Web3 policy office.
Oh, nice.
Yeah. Well, yeah. They're one of the scariest operators, the regulators in Japan. And I can tell you that from my interactions with the project base.
No, there ain't nice letters sent inviting you to come talk.
No. And evidently you can't trust your own attorney in dealing with that organization.
No, look, if you're brought into court in Japan and you're getting an attorney, you're guilty already, man.
Well, no, my client actually had a problem with an attorney taking what he learned about their project and going off to launch a competing offering, while also at the same time reporting them to the authorities. So,
wow, yeah. Get ready to have a little swim in Tokyo Bay, pal.
So Lido DAO was trying to raise $14.5 million from Dragonfly Capital by selling some of their LDO tokens so that they could have a longer runway and didn't have to do any more, so they could have a 2-year runway. It was defeated by the community.
Wow.
I saw some rumors that one of the reasons it was defeated was there was some anonymous whales that came in and started suddenly to vote for it. And they suspected that it was Dragonfly or someone else trying to manipulate the vote, which that's an emotional reaction, people. Look, if you like the project and you want it sustainable and you want the smart people working on it to last and stay there, then give them the fucking money they need. I love DAOs. I love the concept of DAOs, but I am becoming more and more concerned about the maturity and the intelligence of members of DAOs. And I'm almost thinking that there needs to be a mid-tier kind of delegated authority in all DAOs, especially when it comes to things like fundraising and smart technical moves, things that the average Joe doesn't have a clue about or hasn't been involved with in their life.
Yeah.
Because it's just short-sighted, and it drives me nuts to see people react emotionally to things because they feel like they could be being manipulated, instead of just stopping and saying, wait a minute, I want to make it so Lido doesn't have to raise money for 2 years. we can count on the smart people we have staying, and we can count on the security and efficiency of the operations continuing forward. Right now, there's maybe more to this than I don't know, but that's what I saw in a couple of different things that I was reading. I just am starting to be concerned that we, yes, Niblets, a DAO republic, some kind of delegated authority, because with people that are experts in those fields, unlike our republic, which requires everyone to become experts in a million fields, with people that have expertise in security and fundraising and operations and legal or whatever. We've had too many of these instances where the DAO did stupid shit. It's like the DAO that decided to return the money to Yield Guild, right? Those guys. Like, I'm sorry.
Were they the ones that were buying the Constitution, or was that a different one?
Yeah, the ones that were buying the Constitution, right? There was no mechanism to protect the price they were willing to pay. So it's like, okay,
they disclosed their top bid. Yeah.
It was a fun idea, but anyway. So hopefully another proposal will get passed, and they won't have to worry about it. But I'm just kind of disappointed to see kind of
who doesn't want to sell. I don't get why you wouldn't want to sell 10 million tokens above the current price.
It was actually, I think it was actually discounted off the current price.
Oh, it's dropped. Okay.
Yeah. Right. But at the end of the day, those are tokens that aren't going to get sold. Those are tokens. That's an over-the-counter deal,
Yeah.
And you should give the venture capitalists 10% off to come in and give you more money. I mean,
it's a bulk deal too. Yeah.
Yeah. Yeah. So anyway,
I'm with you on the DAOs, dude. I think it's just turned into a mob standing around a fire and throwing sticks at it, basically. It's not, people aren't making the right decisions. And there's a reason why you have boards of directors in companies, because you don't want all the common shareholders to be clamoring around your lobby screaming about shit they know nothing about.
No. And look, I don't want to go back to centralized stupid. I just want a mechanism for some of the things that are more mission critical to be decided by the founders or decided by really smart people that love the project, that have expertise and knowledge in specific areas, right? And those can be divided up too. So there's not centralized power in 5 guys' hands on a board. There are, this committee, this committee, this committee, this committee, this committee, legal, finance, operations, whatever, tech, that allow them to make decisions, because DAOs are the common man is starting to prove that they maybe don't know what they're doing. That said, I don't want DAOs to be completely not making decisions as an organization, as a group. I think there are plenty of decisions that can be made as a group, overall vision and strategy, partnership deals potentially. I mean, I think there's a number of things that can be done that allow the whole community have a say in things, or to be able to delegate votes to people that will vote the way they want them to vote. But otherwise, I have some concerns. So
well, it just seems
Euphoric says Democratic politicians today rarely act maturely. I'm going to assume by that democratic, you mean politicians in democracies and not specifically the Democratic Party, because you're absolutely right. Most politicians don't act maturely. Some are very thoughtful and think through what they're doing, but for the most part, we have a bit of a mess on our hands. Anyway, Joe, what were you going to say?
What'd you say right before the Democratic comment?
Delegating votes.
It just seems like
Joe.
Somebody's just got to put like some corporate governance in place on these DAOs, because I mean, look, if you go do a round and you're a public company, it does go to they don't all go to shareholder votes. That's the thing. A lot of them could just be approved at the board level. So, I think it's kind of like, you don't need approval for every single thing you do. What I like is approvals for, big strategic partnerships, rebranding, things like that. But as far as making the tough decisions on taking capital and things like that doesn't impact token price, that's a board level decision to me, or a senior management. It's not, you're not going down to the mail room to go, hey, dude, hey, Steve, what do you think about that $42 billion deal? Hey, does it give me a paycheck? Yeah, okay, let's do it. I mean, that's it. That's everybody's concerned about the most important important needs of theirs. And, you know, governance, a lot of times you don't get everything you want. I mean, just look at it as the best deals of all time are usually deals where everybody walks away unhappy, you know, because they don't get what they want. And so that's life, man. I mean, everybody thinks we're always going to get what we want. Very rarely do you get everything you want. So it needs to somehow be incorporated in these DAO structures, because I love the DAO structure myself, the concept, you know, but I want to see them go where there's no people involved. Like, just pick an issue. And you spin up a DAO that just runs on its own and generates money and funds shit and does everything, and nobody's running it, nobody started it, it just got going. Somebody wants to do something like that. That's cool.
Well, that's not even a DAO then. It's just radically decentralized, you know, protocols, which that's what Liquidity is. Liquidity is radically decentralized. It's out there just running, can't change it. Now, the organization and the DAO around it are used to promote it and to do biz dev and to bring in integrations and then to launch new products, right? Similar to it or based on the concepts and technology they had. But that kind of radical decentralization, I friggin' love. Like, you know, when it works, it's fantastic.
Well, it has to be also, it has to be a social play. It can't be a commerce play, I don't think. I think it has to be something that creates us, you know, like the UBI example, let's say, or, you know, anything else, you know, whatever you believe in or advocate for on a social position. Because I think with for-profit companies, it gets a little cumbersome. But I think in like, there's a lot of people call themselves DAOs, and we've talked about this before, but you know, most of them really aren't. So to me, I think we just, like everything, it'll evolve, it'll get better, and we'll get to probably the shit I'm thinking in my head eventually. But you know, right now we're just, like you said, going through those speed bumps. It's like everybody's like, wait, everybody gets to vote on this? And everybody's like, yeah, you're a DAO, dude. And then they're like, well, that doesn't make any sense. So then somebody figures out a way to fix it. You know, a new DAO republic, like I think, was it Niblets? Niblets said that, you know, that has that type of governance in it. I don't know.
Yeah, absolutely. So before we wrap up here, because we're already at our closing time.
Cool.
A little bit of fascinating data from Coinmetrics. I'll put this in the show notes, but this was really interesting. Based on usage times of Bitcoin and Ethereum, it looks like Bitcoin is heavily concentrated Europe, Western Europe, and the US in activity, and Ethereum is balanced worldwide. I found that really interesting, with some heavy usage in Asia, but for the most part, that, you know, it's balanced. They did say that historic tendency for gas fees to be higher during US market hours. But that may just be that we're stupider and we're not optimizing our gas fees. So,
well, remember when China was big, we were always doing the trades at like the 6 p.m. window, I think, because that's what, before most of them had gotten up, and you know, most of the US guys were at happy hour, so the gas fees go down. But you know, then that kind of changed once we got off that China US cycle.
Algorand activity is higher during New York Stock Exchange hours, but what they should have said, for the most part, there's just not really any activity.
Yeah.
So it's
no, bad. I saw four were sold right there. 4 Algorands were sold right there.
There you go. ETH Classic is Asia based right now, man, like all Asia, which is interesting because it's proof of work, and Ethereum's going away from proof of work. And one of the reasons they said that Bitcoin has less Asia is because of the Bitcoin mining bans. But here's a proof of work token with higher activity in Asia Pacific. So pretty interesting. Litecoin also Asia Pacific. Bitcoin Cash.
What the fuck?
I'm not even going to start today. I don't have the energy for a Bitcoin Cash rant. I already did my rant for the day. So that's all I got for the day, Joe.
So tell me one thing before we go. What was your SEC rant about? What was the topic? Was it the Toomey letter to the SEC, or was it the security stuff with Coinbase?
It was Coinbase.
Yeah.
And the rant was, Well, first I was just kind of talking about the news that, Coinbase being investigated. It happened before the insider trading thing. They had actually started that investigation before the insider trading thing. Coinbase is saying they're not securities, et cetera, et cetera. And what I said, though, is what concerns me is that Coinbase getting slapped like this, while it'll probably just be a fine, I don't think anybody's going to jail. If you're a big enough company, nobody actually has to go to jail, right? Which is always interesting to me. The smaller projects, people have to go to jail, but the big companies, nobody has to go to jail. And what I said was, though, is what I'm concerned about is it will reduce the number of available tradable assets for U.S. on centralized exchanges like Binance, FTX US, et cetera, because they're all going to freak out. Their attorneys are all going to look at them and say, oh, fuck, we got to get rid of the ones they said were securities. Now what else? We got to re-review everything. And it's just going to make it harder for U.S. people to actually trade actively on centralized exchanges. It doesn't reduce our access on DeFi, but it's just ridiculous. So then my rant went into, I really wish the SEC would refocus their incentives on less about only being about enforcement after the fact and more about education and sandboxing. The same shit I say every time.
Yeah. Okay. Well, when I saw, before we go real quick, I'll do this in 60 seconds. They were already in there investigating that, those Indian dudes on the insider trading scam. The one dude, his brother and his friend, and Coinbase was helping in that investigation, let him in. Coinbase was key to finding out who was doing it. I mean, then they turned around and used stuff they gained in that investigation to then start this up, because then they go,
well, actually, the SEC is claiming this investigation started before the insider trading.
Oh, this one. Yeah. I was saying that they used it for the for other things, and then they go and throw in that these are securities and out of this list of 25 that the insiders traded in. Well, number one, you could still have insider trading without a security.
Exactly.
Okay, that's just
there was zero need to go there.
Yeah, and so the second thing is, if I'm Coinbase, I then, with a smile on my face, flip around and I go, okay, well, this helps a lot. So what we're saying, out of this 25 list, we know that these 16 are not securities because you said they're not.
Yeah.
You said these are. Now, we don't agree with that. We agree. We would think that they're not, but we're willing to look at each one separately. But what we do know is these 16 aren't.
Right.
So the SEC is kind of taking shit off the board without even realizing what they're doing.
Right. And then what I would go back and say is, and tell me exactly why each of these 9 are.
Yeah, exactly.
What are the parameters? What made you decide? I'm sure they'll say, how we test.
No, I think what they'll say is that, because this is another thing, is that you can have a how do I put this? You can do a security offering, okay, like raising money for something that's not a security. Yeah. Okay, so maybe the token's not a security, but maybe they did some technical thing in the offering that wasn't compliant, and then it becomes a violation of security fundraising rules. That, maybe they didn't take accredited, or maybe they took an American that wasn't, or, maybe they didn't file this piece of paper. And then they go that, because that's what the discussion was around ETH 4 or 5 years ago, was that, oh, we're not a security, but we did a fundraise like we were a security, but that doesn't make us a security. And that's true. It doesn't. You pay for the violation of running a raise that is non-compliant with capital raising rules and not have a security. So I think I would start winnowing that list down, like you said. The 16, we know these, I'd have my lawyers at the next meeting say, we know these 16 aren't securities because you said in the letter they're not, because you said these are. So if you say these 9 are, then these 16 aren't.
Right. So these 16 we can model around for any other offerings. And
yeah, exactly. And do it the way they did it. I mean, that's what I would do, because you got to get
me
to
too. That's a good idea.
We got to get better definitions. Just because you conducted an illegal security raise per the SEC doesn't mean it is a security. And that's the important thing. And that's the nuance that anybody who has the money to fight in court over or wants to, I think, should focus on. Because then you're like, look, nobody wants to have grandmas getting ripped off by these hustlers on the phone selling newspapers or driveway resurfacing or shitty crypto coins. Yeah. But we're not that. We want to shut that down. but we still want to
Right.
have capital markets functioning solidly and entrepreneurs and innovators going forward. You know, that's
Yeah,
how
but
I would take it.
how about flip it from adversarial to
Yes.
educational and helpful, right? Guide us into compliance. Help us do it. Make it so I don't have to spend $250,000 on legal fees to be compliant. Make it so that you're out educating people how to avoid scams and that you're making disclosures easier. Create a rating system for showing disclosure levels, right? Sandbox people so that they can test technologies. I mean, there's so much friggin' opportunity to flip the entire model on its head and make the incentives about growing it safely, you know, and that's the frustrating thing.
To me, I agree 100%, because why not have 5,000 startups in the space trying to do it right, and everybody gets a free pass if they fuck up, or they can get a remediation thing, versus 10 like we got going on now, and 8 of those are bullshit, you know, because everybody who's legitimate is afraid to do anything.
Exactly. So, and they're going to leave the country. It's or be a non, you know.
But anyhow,
it's a hot mess. Joe, I got a 1 o'clock. I got to drop, buddy.
Sorry.
All right, everybody. Thank you for listening, watching. Please rate and review us on Apple Podcasts. It really helps. Really, really helps. Really, really, I'm begging you to please rate and review us on Apple Podcasts. It helps. It does help. Anyway, give us a thumbs up, subscribe on YouTube, click the little bell so you get notified of new announcements. If you have anything you want to tell us about, feedback, ideas, thoughts for guests, B05 Crypto on Twitter or Telegram. We'll keep it simple. Thank you very much for listening. We love you and appreciate you.
Thanks, everyone.